Okay, great. I'm seeing some thumbs up. It means you guys are involved and engaged. I like that. I like to see that you guys are paying attention. Okay, well, maybe you are wondering, what are the, standard rules for LLCs? At least you need to have at least one member to get it started. So it's treated as a sole proprietorship or an entity. Also, it is best to form your LLC in the state that you reside in. But now later on, we'll explain that you can be in another state, and we'll go into that a little bit later. If you plan to hire staff, you will be required to obtain an EIN. Now, I do want to warn you that whether you plan to hire somebody or not, I always do recommend that you get an EIN regardless, because you do not want your personal social security number. If you're doing business and opening bank accounts, you don't want to have to use your personal social security number for that. So you want to protect that. Also, it does require articles of organization. So there are different paperworks that need to be documented and filed with the state to open this up. Typically, the rule is if you have partnered and one member leaves, then the LLC needs to be disbanded. Now, it needs to be dissolved. There are other ways to approach this, though. And then also, LLCs typically do have less paperwork than forming a corporation. Okay, you may be sitting there and thinking, well, I live in this state. What are the rules that I need to know for this state? I do want to warn you, each state does have different rules or different laws and statutes. Sometimes the words they use are interchangeable. What you need to do is you need to check with your Secretary of State or, chapter of businesses. They may have different names, but you'll want to know what is required. And you can find most of that on the website. And you'll want to take a look at the different policies of what's required. Now, one big thing I really do want to emphasize, what I am noticing of differences of requirements are the operation agreements. Now, only the state that you see as far as California, Delaware, Maine, Missouri, and New York, those states require that you have to have an operating agreement. They have to be filed together. They have to see it, a tangible operating agreement. But now, if a state does not require you to have the operating agreement, then I always do advise that you go ahead and set up an operating agreement if you're partnering with somebody. Because suppose you get married, for example, it's like a prenup. If it doesn't work out, then you've got problems. Well, everybody can just follow the operating agreement just like they would follow a prenup. So we can talk a little bit about more of that in depth later. Okay, I did mention that an LLC has two major types of LLCs. One is a foreign LLC, and then there is a domestic LLC. So if you're living in a state and you operate the LLC and you do business within that state, that is considered a domestic LLC. A foreign LLC is, suppose you set it up here, but you are wanting to work a business opportunity in a different state. So you're residing business in that state. That is considered a foreign LLC, and you need to sign up with that state as well. So if you're wanting to set up the LLC in a different state, but you want to do business in the state that you reside in, that is also a foreign LLC. So I'll go and let you guys read this. Go ahead and thumbs up when you're ready, and then I will cover some more information. If you want to know a little bit more about foreign LLCs, this would explain a little bit more about what it looks like. So if you have a physical presence in that state, you're rolling up your sleeve, you're actually doing the work, you may need a foreign LLC. If you do some work in that state and they require a business license, require a CPT license, or maybe an engineer's license, then you probably will need to get a foreign LLC. Now, if you hire staff, but they work in a different state, then you may need to get a foreign LLC with that state. If you employ workers in that state, maybe they're visiting or they go to different meetings, you may need to get a foreign LLC. Okay. It's getting exciting. We're getting closer to how we form an LLC. So let's get those likes up there. So I see that you guys have read this slide. I love seeing all those reactions. I really do. Okay, so you guys might be sitting there thinking, okay, well, I'm understanding it, but how? What it is that we need to do to start this? Well, it starts with 4 steps to form the LLC. And these are just more general steps for any state, really. So first, what you need to do is you need to start doing some research. Look for your name. Make sure that name has not already been claimed. And you want to make sure that there's no copyright on that name. So do your due diligence. And once you find a name, but also if you want to do a DBA, you want to check into that name as well. And then your second step is what you'll want to do is you want to look at a registered agent. And we'll go into that a little further as well. The registered agent can be yourself, or you can hire a third party. Your attorney or your CPA could do that as well to be a registered agent. And then you will need to prepare your LLC operating agreement. You may not need it if it's just by yourself, but if you are in a partnership, you would want to do that. And then, you can breathe. I know it's nerve-wracking, but now it is time to go ahead and file. You file the articles of organization with the state that you plan to establish that LLC. I love seeing all those reactions popping up. By the end of the course, you guys are going to become experts in this, 100% experts. Okay, so remember we mentioned finding your name. So what you'll do is what I love about technology today is that you can find a lot of information out there. So this database will show you names that are claimed for the state. And so you'll want to check to make sure that they're not claimed. You'll want to use a special website to check for the domain. And now one caveat is, suppose you want to set up a business, but you're not quite ready to establish it, you can reserve the name with that state without establishing the business yet. So basically you pay a fee. Most states have an option where you can just hold your name and it gives you time to get all your ducks in a row. And also you want to make sure that if you are planning to do a business in a different name, you will want to register as a doing business as name. So then you're ready to progress. Okay. You guys ready? So now remember I talked about the registered agent. I'll go a little bit further into depth of what that concept is. So if you look, the registered agent in this picture, really does paint a perfect picture. So you've got the registered agent, and that is the place basically where the wall is. And it can be you who is this registered agent. And so everybody would recognize any legal communication, any type of compliance notices or anything would go through that first wall. And then it would pass on to who the owner is. And so that is how you protect your liability some more, is that registered agent. It protects as a wall. Okay, I know you probably need a little bit more time to read this to be able to digest this information. Okay, I'm sure many of you guys are now starting to think, well, okay, I remember we talked about the operation agreement. What does that entail? Okay. Well, the operation agreement is such a critical part of your business plan and your foundation. Just to make sure that you are, compassing it the correct way, that you're headed north. And so, once you may set up a partnership with somebody, you will want to agree upon what the business organization will look like. It's an LLC, is it going to be taxed as an S corp, or any types of taxations? It will be a partnership. Who's going to be the CEO? Who is going to be responsible for this, that, and the other? You want to have your agreements in place. And some of those may require a board, some may not. And so you'll need to name those. And then also, there may be voting rights. Oftentimes LLCs do have more complicated structures where, some people do have some voting rights, or some people may not have rights to certain things. There's also restrictions on selling shares. So if you want some more private control of that with the group, then you can have a restriction of who can sell the shares and also when, to protect your business. And most importantly, the money. How do you disperse those notices? So is it going to be based on profit and losses? So if I own 50% and the other person's 50% owner, that means the profit and loss is agreed upon, or how are we splitting that out? Or sometimes you may have a profit and loss, but maybe you have a limited cash flow. So you need to agree, how much capital you're going to be working with, how much you need to actually be putting into reserves to keep your business afloat. So that's very imperative as well. And then also, worst case is sometimes, business does fail, or, maybe you partner and everything is good. And then later on down the road, the business partnership isn't very good. And so you need to have an exit plan. And then also how you agree on the dissolution of that company. Okay, I'm seeing a bunch of those reactions, those thumbs up. Gosh, I needed a little bit of time to breathe as well. Okay, so now it is time to get moving. So you're thinking, okay, I'm ready. I've already agreed upon a name. Now I just need to do the paperwork. So now you need to go to the state website. And what it is that you need to know is, okay, you've already got your name. You need the address where those notices will get sent. Are we going to use the registered agent? That's typically what is used, yes. And then also, what is the purpose of your business? That is also paramount as well. Sometimes they want to know is it nonprofit? What type of business is it? And also the why. For example, there are some states that you may be required to have a license, like for example, a CPA or attorney's license. You can't just establish an LLC. You actually have to use a special through the state board who oversees. Maybe it's the engineers, there's special processes with certain entities. So you should want to check into those requirements and then also the licensing board requirements as well. Okay, moving on. Okay, so just get a little bit more deeper into this knowledge. All right. Looking good, looking good. Awesome, awesome. Okay, so you've got all your information ready. And so now it is time to, fill out the paperwork. So I always advise you to do it online. Now you can do it online and then download it and you can write the paperwork, but we want to save trees and, ink right now for my printer is crazy expensive. So if you want to save some time and money, you can do it online as well. So you can just send it over to the state. The state will take a look at it. They will then approve you. Once approved, then you are ready to move on to that next step. Okay, now you guys are getting so excited. I've got my business name. Oh, it's beautiful and shiny. But I hate to be the bearer of the bad news though. Taxes. Ugh, I know you guys love taxes, right? Taking all my money. But no, that is such an imperative part of your business and your general your life journey. What's ironic is, the smartest person, Albert Einstein, he had commented that one of the hardest things in the world to understand is income tax. Yep. And I have to say, I agree with him. I worked as a CPA and I do taxes and those tax codes, whew, I would say, I mean, it's huge. It would take so much time to get through all those tax codes. Okay, so I want to give you a little bit more time to digest this information. Let's I just want to make sure that we're just getting a little deeper into it. So I'll just wait for all your reactions. The more information, the more complicated it gets. Okay, looks like we're good. We've got a bunch of thumbs up. One nice thing about being deaf is I get less tired of from having to talk. It's very nice not to have to be hearing sometimes. Okay. So you might be thinking, okay, I've got an LCC set up, but the question is how is it taxed? How does all that work? Okay, well, that is where we're going to go a little bit further into that business policy. So a single member LLC, now disregarded entity, is considered as a sole proprietor, which means you can set up an LLC by yourself or you can be partnership. So that would apply to you. Now the IRS will take a look at you as sole proprietorship. Now you do have an option where you can elect to be treated as a C or an S corporation. And I will expand on that a little bit later. So if it is two partners or more, then that is considered a multiple member LLC. Whereas if you just apply with two people, then by default, it would be treated as a partnership. Now, I do understand that there's the same advantage with a single. You can elect with the IRS that I'm wanting to be treated as a C or an S corp. Both of them do have their pros and cons. Okay, great. Got some reactions going there. I hope you're thinking about your taxes. I know right now it's tax season, so I'm sure you guys all have headaches right now. You might be nervous, you may owe or not. Oh, I feel the same way all the time. Okay, so now disregarding entities. So as a sole proprietor, you will file using Form 1040 on the Schedule C. The advantages of this is it is the simplest tax status for a single member. And this is because all income is all taxed as one. So the profits that get put in is, you just pay taxes on it one time. And it's put onto your schedule, your 1040. And what this is good for is if you're a new startup baby business, this is good for that. Or also, if a business is very simple, you don't have a lot of money in the bank accounts, these are good to operate as that. I just want to give you a little bit more time to read, and because it does get a little bit more complex for the advantages of the sole proprietor and the partnership. Okay, you can see this picture of the two people coming to an agreement and they are shaking on it, becoming partnerships. Now, this is where things change just a little bit more. So to file for a partnership, you actually would not use that 1040 first. What you would do first is you would take a look at this form 1065, 1065 for a regular partnership. You would file that one first, and then later on we'll talk about deadlines. Like if we say the partnership was due yesterday. I hope you guys filed extensions. So the advantages of the partnership is partnerships are not directly taxed by the IRS. So that 1065, there is no taxes that are paid yet. So what happens with that is that your owner percentage agrees upon that 1065, you would actually get a K1. And so somebody gets a K1, and those are my shares, my percentages of the profit and loss. And that is then what we put down in your 1040 for your taxes. So the disadvantage is a double tax. Oh, I'm sorry. The advantage is that you do avoid the double tax. Now, a disadvantage is that if the partnership is considered a flow-through entity, which means that if there is money left in and you haven't received it, so a passive LLC member still has to pay taxes on those profits and losses, those net earnings. And so this status is good for multi-member LLCs and also LLCs that do not plan to raise external equity. So typically it's good for people that just have a one-time agreement for a partnership, or maybe just a few times to have a partnership. Okay, if everybody has read it, please do mark your thumbs up on the reaction box. Yeah, there's a lot of information here. In the future, when you guys, start something up, I always suggest that you speak with your local accountant or your local expert and discuss things more individual to you. Okay, are we all ready for me to cover some more? So S corporation, a lot of you guys have probably already heard of that. It's technically a corporation, but as an LLC, you can elect to be treated as an S corp. And what's nice about that is the advantages are that it is pass through taxation. So just like in a regular LLC, it is taxed to it's not paid to the business, it's go to the 1040 on yours. And so what you own with that percentage, you avoid that FICA no employment tax. You also avoid that double tax because it's an S corporation. But one drawback though, one important thing is that say you own any shares in the S corp and you do actually do work in the business, maybe as a manager or whatever it is, you must pay yourself a reasonable salary. So, for example, if the managers are doing the work, they need to be paid what is a comparable hourly rate or a comparable salary. For example, if you get your paycheck, you get your W-2, then you'll have FICA tax already withheld from that. So that is why it's nice. You can pay yourself as a business expense. And then when you get those profits, then you as a share owner, you get that. And then you're able to get the dividends. And then when you file that, there's no self-employment tax. And so that actually saves you money. It's a very awesome structure. Also, an S corporation does have limitations and it's only limited to 100. There has to be common shares. And so that's why it's limited shares to 100 and they all need to be in the same class. Now so if they recognize some profits and there's money there, but yet you have not received your dividends yet, you'll have to pay into that money. So this is good for those businesses who are starting up and then they have finally, gotten their revenue in and they can afford to pay themselves a salary. It's good to reduce your tax impact. Okay, great. A C Corp. A C corporation is more of big companies. They have an unlimited amount of shareholders, no limits, and there are different share classes as well. It's easy to sell your shares. And then also, what happened with the C Corp is you pay the business tax at that level and whatever work that's done, those profits do the tax. But say you get the dividend distribution and you pay the taxes on the dividend distribution. So that's what the double tax means. It does require more paperwork. And if you are a company that has become larger, you can pay for this. And if you are wanting to continue and raise more equity, get more of those investments to grow more, and then become public later, this is good for that structure. Okay. So what you would do is you need to apply for an EIN number. You want to elect if you want to be an S Corp. You would use the 8832 form on the IRS website. If you're wanting to be an S Corp, then you would use a different form, the 2553 instead of the 8832. This information here is easily found on the website. But for those, here are the different deadlines. I don't need to go into depth on these, but these are different deadlines. And note each of these classes, each of these different things, categories do have different deadlines. If you are not ready, you can file an extension. It's very important to file an extension. When you do that, you will get a new deadline, and that information will be supplemented with your materials. And that information is very easily found on the website as well. The estimated tax payment. So suppose you pay yourself a W-2, you've hired a staff, you have to pay them W-2s. This covers your FICA and your tax withholdings. So these are the deadlines. You also need to file quarterly reports. Okay. Employment tax, Form 941. That's the quarterly report. So, it will become, it also depends on your business size, and then if you're paying quarterly. So these are the different deadlines for those quarterly payments. I'll give you a little bit of time to read over this. This is just a little bit more of a simple idea. Okay. Now you guys all have your tax plan. You guys all have your businesses. You guys are ready. But now it's time to get your hands dirty in your business operations. Yeah. So what does that mean? Sometimes people hate that part, the financial statement and records, but they truly are critical to be able to monitor your business's health and, see what investments that you have and keep track of what you own. I'll give you a few moments to peruse this. When you're ready, go ahead and hit that thumbs up reaction. Okay, you are now a business owner. Congratulations. It's so exciting. Now, I'm sure some of you guys have heard, maybe some of you guys have already owned LLCs. Go ahead and, go into the chat room. If you have an LLC, or maybe you have already started up a business, go ahead and type that up in the chat room so we can get to know each other. Okay, so what do you need to become successful? This really applies to current business owners, new business owners. What's important is that you always want to stay organized with all your documentation. Keep detailed records. Analyze where you are. You don't want to get complacent. You always want to make sure that you're studying and analyzing your competitors, making sure that you have the best quality, the best experience, the best product. All of those are critical. You always want to make sure you are understanding the risks and the rewards of your business. You want to be creative, stay focused, and you always need to be prepared to make a sacrifice. You want to ensure that you're providing great customer service and that you are being consistent. Those experiences, quality control, etc. That is what will set you up for success. Okay, I'll give you a few moments to take a look at this and then start putting in your reactions of those thumbs up. I hope you guys are getting excited and that you guys are getting fired up about different business ideas that you may have. So now you may be wondering what the business record looks like. Well, the most important part that you need to track is your accounting records, your bank statements, credit cards as well, your business loans, any type of legal documents, as far as your operating agreement, any contracts that you might have, anything like that, you'll want to keep those documents. Make sure you have your permits and your licenses, as well as your insurance documents. All of these are so critical. And keep them in a safe place as well. Okay, I'll give you some time to take a look at this. Okay, great, great. Now, I talked about keeping your records. This is such a critical part of your business's health. It's really always important when you're starting a new business. QuickBooks is always a great product to use. It's very nice. It's got the tax compliance, easier tax preparation, has a simplified business process. It's very cost effective. It's got accurate forecasting of your needs. It will also increase your productivity. It will improve customer relationship management. You will have increased security, and also it will streamline your invoice approval process. For example, it's just easier to deal with. And then your cash flow management is paramount as well. These are always good things to start with. Okay, we're getting near the end. So the most important part when you're planning your business is you want to talk about those exit strategies. Let me know when you're ready to cover. Okay, congratulations. You made it to the end. This is the last part. You might be thinking that you'll stay in business forever, but sometimes life happens. Sometimes you get tired of the business. Sometimes you just want to change to something new. It's worthwhile planning for an exit strategy. One way to do that is by a merger or acquisition. If you're going to do a merger, then maybe you need to work for it, or maybe somebody's going to buy you out. Or maybe if you want to be very assertive and you go become public, you become a public trading company through IPO, initial public offering. You may sell to a friendly individual. Maybe it's your best friend, your family member, your aunt, your uncle, who have you. Maybe it's a staff that works for you now. You sell it off to them. You could also get your cash cow, which what that means is you've got your baby, your business, and you can be more hands off and you can hire somebody to manage it for you where you're just, reaping the profits. Or you can liquidate and close. You can sell off, you can shut down. So if your plan later on, you just want to make sure that you're designing your business the right way, whether it's an S corp or C corp. You just really want to think about all those things. Okay, well, that's all we covered today from start to exit. I know it is a lot of information, so I'm ready to turn it over for any questions that you guys may have. Okay, one person's asked a good question. Does the decision of whether the LLC is domestic or foreign have to be decided before the LLC is established? Well, it can be a good idea to figure out which state it is that you're wanting to your business to establish in, and then that will then tell you where you operate will be considered as foreign or if it will be considered as domestic. But while you're in your business operations, I'll tell you, business is fluid. it will always change. You may be starting up at home now, and so it's domestic, but then later on your business demands grow. And so, to grow, you've got to hire staff, and they may reside in other states as well. So that is where you would have to then file for a foreign permission to run in that state as well. Okay. Okay, question number 2. Such a good question. Gosh, I love my audience today. Okay. Can you explain the difference between a single member LLC versus a sole proprietorship? What is the difference between those? Well, really, to be honest, nothing. Really, they are both run as a single person, and the taxation is the same as well. The only difference is an LLC is a little bit more officially recognized using their EIN number, and it also would protect your business liability as well from your personal assets. It keeps it completely separate. That's why I never advise people to do business as a sole proprietor. I mean, if you want to be a sole proprietor, that's fine, but you still need to set up an LLC as a disregarded entity. Okay, question number 3. As a new business owner, one thing I would be surprised at is the health insurance. It cannot be written off through the LLC. Is there any ways around that? Oh, that is always a contentious issue. Yes, because you do have the problem of a single owner or an S corp, and technically you cannot pay insurance through that business as a business expense. You can pay it, but you actually have to put it into your taxes for K1 to show and recognize that you have that as a benefit. In your personal tax, you will then have to file your health insurance bill. And so it's very involved. But really, the best way to do this, if you want more things paid, then the best thing is to do it as a C corp. Okay, there's a good question here. If I need a foreign LLC, if you've got customers from another state who host a business meeting by Zoom, no, you probably don't need one because it's just a meeting and a consultation. You don't need that for just a video meeting. But it becomes a little different if you're actually going and maybe selling a product, or you're hiring an employee that lives in that state. You'll want to check with each state requirements because they do differ from state to state. You want to talk with your tax person or your tax expert to review what it is that you do and do not need, because it does vary. Okay, question number 5. As a solo contractor, so a 1099, with a few businesses in another state, will it impact your tax process? And I assume that, let's see. Oh, yes. So you are a sole person doing businesses in another state. It may depend on the nature of the work that yourself, and you might need foreign or not. But if you are doing work in a different state and they are paying you, then that's more responsibility on them. So it looks like, we'll just need to go a little bit further into what that situation is. So, all situations can be a little different. Okay, question number 6. As the company grows, do the tax statuses stay the same, or do those change as well? So as your company grows, then you elect to stay the same. But if your tax status may change, the only way that would do is if the requirement is if you are at cash basis now, but in the future, then maybe you hit, whatever revenue it is, your target number or your sales, then maybe you need to change that to an accrual. And that's a little bit more depth. And that might change. But in general, S corp or social media will be like that. Okay. So another question is, I have an opportunity to talk with my wife, my friend. Do I need 2 separate LLCs? One for my business specific with my wife, and then the other one for my business specific with a friend. Well, that is where I would advise you to talk with your attorney. because each state is a little bit different of what they can and cannot do. But as far as the wife and the friends, well, the three of you guys will be partner. No, you would just need one LLC. If you guys are all going to be partnership, you would just have your operating agreement. But if you're doing a different business, then yes, you can have additional subsequent LLCs. Okay. I'm talking about the single membership LLC. If this can happen to change the LLC, how long will it take to do that? I mean, really, it really does not take long at all. Once you finish your meeting, you can go ahead and get up the computer and you can look at what your state is, what that process is to apply for the LLC. And then you can just drop the S-Corp. Okay, I believe that is all the questions. Great. Oh, well, actually, it looks like we might have one more. Okay. Do you suggest getting the EIN regardless on whether we are hiring employees when we are applying for the EIN and doing business? The head member who applies for the EIN needs to give them their personal social security number on the application to receive the EIN number. That person who applies for the business, they would need to get their EIN. I'm trying to think. No, I don't think your social security number is required, just the business name. I think they have to get sent into the IRS to then get the EIN number. But you can get it right away. You can get it just in one day. It's very easy. But it's important. Once you have your EIN, you do not need to use your social security number anymore after that. Okay, great, great. Okay, great. Thank you so much, Heath. We have learned so much, gosh, about setting up our own businesses and LLCs. And I want to just thank everybody. And I just want to let you guys know that you can watch Heath's additional courses. SVF has partnered with Gallaudet to provide a certified program, and there are a 16-week program, and Heath does have some courses that are ready, and they go even further into depth and what they need to do to scale and to exit. And so it is such valuable information. So thank you again, Heath. Great. Thank you. I appreciate you all. Thank you. Thank you so much. Okay, sign up for the next course and the next webinar. And the course link is in the chat. And then also we will be sending out an email blast as well. Okay, great. You guys have a great day. You too. Bye-bye. And just remember, when you want to do it, just do it. Go ahead and do it. Okay, great. Thank you. All right. Bye-bye. Bye-bye.